So this is basically the professional standard. Okay, so what is the professional standard? Whenever we are doing any accounting, okay, so we need to do an accounting or we need to prepare a financial statement on the
Okay.
basis of accounting standard issued by the FASB. Okay, FASB or GASB. Okay, so that is basically why we need to use the accounting standard so that uniformity we can maintain while presenting any financial information. So
Okay.
in US, basically, who has a right to issue a professional standard? So for profit companies, means the normal business entities, it is basically the Financial Accounting Standard Board, which we call as FASB. Not for profit organization like trust or any educational institute, medical institute, where service is the objective of the institute, not the profit making. Okay, so for them the standard issued by the again FASB, Financial Accounting Standard Board. Okay, then government entity means the corporation or federal, means the undertaking which is owned by the federal government or state government, um, municipal corporation, or any entity which is owned by the government. That is basically the governmental entity. So Government Accounting Standard Board, GASB. Okay, so means whatever the financial statement we prepared for the government entity, that the accounting standard which we need to follow, that is issued by the Government Accounting Standard Board. Okay, so that you need to keep in mind. Okay, because like in upcoming chapters you will see that means we need to study like the all the commercial entities, how we need to maintain the books of account, or how we need to do an accounting for a commercial entities. And plus in a the last chapter, 7 8 chapter, that is basically for not for profit organization and governmental accounting. There is a huge difference between how we are maintaining the bookkeeping for the profit oriented companies or commercial companies, and how we maintain the books of account for not for profit organization and governmental accounting. Clear?
Yes, sir. So this is similar to that IASB which we
Yeah,
learned, right?
yeah,
Okay.
they are basically for IFRS. Okay,
Yes. This
that
is
is
for
followed.
gap.
Yeah, that is followed by mainly European countries or the UK. Okay, and
Okay.
this is basically the US gap.
Okay, sir. Clear.
Hmm?
Yes, sir. Clear.
Yeah. Then you need to understand means the financial accounting standard for a US GAAP. Okay, SEC, means I'm just clearing the terminology basically. Okay, you have a detailed notes that you can read it. Okay, so US GAAP is basically financial accounting standard which is applicable for any US entities or in the US country. Okay, then SEC is just like a stock exchange. Okay, means in India it is just like a SEBI. So that is basically the SEC. FASB is just we saw the Financial Accounting Standard Board. Okay,
Okay, sir.
yeah. And then accounting standard update. So what is accounting standard update? Basically, once we issued the accounting standard by the FASB, okay, and because of some practical situation, we need to keep on updating the accounting standard. So that is basically the accounting standard update.
Okay, sir.
Okay, so this way,
Yes.
these are basically the terminology you need to keep in mind while we are studying further. Okay, then how it
Okay.
get evolved over the period means like in earlier period or somewhere before 1929, there is no such standard. Everybody is following their own set of accounting rules. Okay, then in 1929, because of huge depression in the market, it is decided by the authorities that we need to evaluate why this depression arises. Okay, and then this I mean the development of accounting standard started. Okay, then in 1934 SEC was created. SEC means just like a stock exchange. Then 1939 CAP was created, and then it get evolved. Means like it is just like a FASB or okay. But earlier we called this as a CAP, and then 1959 APB was created to replace the CAP, and 1973 FASB was created to replace the APB. And then there is a ASC. Means when they realize that we need to update the old accounting standard, then they created an ASC. Okay, so this is basically how the accounting standard get developed.
Okay, sir.
Okay, now SEC was established by the Securities and Exchange Commission Act of 1934. Okay, so SEC is just like in India we have a SEBI. The same way it is a stock exchange. Okay, then pronouncement regulation SX we will see in a detail. Financial reporting release FAR, accounting series release ASR, interpretative release, staff accounting bulletin, and the EITF topic D and SEC staff observer comment. Okay. So means whenever we find any issue, means what like if you need to do some accounting entries or if you need to follow some guidelines, so this should be the sequence. Means you need to see first regulation, then you need to refer the financial reporting releases. Means whenever the some releases issued by the SEC. Okay, so means it is just like an explanatory statement, and then there is an accounting series release, then there is an interpretive release. So in this order you need to follow. If you are not able to understand any concept, then you need to follow in this sequence. If the clarity given in the regulation SX, then you do not require to refer financial reporting release or accounting series release. You need to follow the regulation SX. If you find any ambiguity or you are not able to conclude anything with reference to the regulation SX, then you need to follow the financial reporting release. Okay, it is like this. Then
Okay.
Financial Accounting Standard Board was established in 1973 and has since determined the gap. Okay. So what are the FASB responsibilities? Improve the usefulness of the financial reporting, maintain the current accounting standard. Okay. Promptly addresses deficiencies in accounting standard. I mean, once we issue the accounting standard, we may realize a particular situation is not covered in accounting standard. So they need to address this kind of deficiencies. Then promote international convergence of the accounting standard. So what is this? Basically means some part of the like in India we are following the IAS, Indian Accounting Standard. In Europe and UK they are following mostly the IFRS. So they need to prepare the accounting standard in line with the what the other area of the world following. Okay, so that is basically the promote international convergence of accounting standard. Then improve the public understanding of the nature and purpose of information within a financial statement. They need to continuously issue a guideline or the explanatory notes, so everyone or the normal person are able to understand the information mentioned in the financial statement. So these are the responsibilities of the FASB.
Yes, sir.
Okay. So these are basically the theory part. Okay, but you need to keep in mind so that whenever we like start with the problems, then you may get the you may need to understand the reference of what we learned earlier.
Okay, sir.
Then US GAAP area accounting standard codification ASC. So the FASB accounting standard codification has become the single source of authoritative information for non-governmental US generally accepted accounting principle. Okay, so this is the topmost like authority who are issuing the accounting standard for non-governmental US non-governmental entity, like for the business entity or any not for profit organization. So means I keeps on telling you from which area you will get the question in exam. So these are just for an understanding. You will not get much question on this topic, but that doesn't mean you never get the question. There may be a one or two question from all 70 question on this topic. So
Okay, sir.
Committee on Accounting Procedure. The Committee of Accounting Procedure is a part-time committee of the AICPA. Means they are just basically issue the procedure or guidelines how we need to implement the accounting concept. Then Accounting Principal Board APB. The APB is the part-time committee of the AICPA and has determined the gap from 1959 until 1973. It issue a APB interpretation and accounting principle board opinion. Okay, so this is basically how the accounting means FASB issue the accounting standard. Okay, so these are the phases where the different bodies working first, and it is finally taken over by FASB accounting standard codification. Then accounting standard update. The FASB issue an accounting standard update to formally update the financial statement readers on the financial changes made to the FASB codification, including changes to non-authoritative SEC content. Please note, ASUS are not considered authoritative standard. Okay, so this is basically it is means they are issuing an explanation what changes made in the accounting standard. Okay, so finally what we need to refer the updated accounting standard, but whatever may be the update, it is given by the ASU. It is like this. Okay, so this is just for an explanation. Means whenever we are issuing any comparative, okay, so it is given by the ASU, but you need to refer the updated accounting standard issued by the FASB. Clear?
Yes, sir. Clear.
Then Private Company Council. The Private Company Council was created to improve standard setting for privately held companies in the United States. So this is basically a government body. Okay, so they I mean, what is their responsibility to improve the standard setting? Means the private companies. Okay, means as you know, there is a private limited company and there is a public limited companies. Okay, so public limited company generally monitored by the SEC. So we do not require to take care of how they are maintaining the document. Okay, but for private limited company, there is a body which is Private Company Council, and they oversee how to improve the standards setting for the privately held companies in the United States. Okay, so generally, what happens there is a different norms. I mean, it is not the case totally different, but sometimes there is a certain exemption to the private companies. Okay, because in a private companies, it is the owner stake only. There is no much stake of the general public. Okay, so there is a certain freedom given to the private limited companies. Okay, so to monitor whether to what extent we need to give the freedom or we need to we need to adopt a liberal approach in implementing the accounting standard. It is decided by the Private Company Council. Then governmental
So,
account. Yeah.
PCC is under FASB, correct?
No. Okay. FASB is altogether the separate. Okay. PCC
Okay.
is a there may be a some nomination from the FASB. Okay. But like PCC, what they are doing, they are basically advising to the FASB to what extent they can liberalize accounting standard to the private limited companies.
Okay, so they
Okay.
play an advisory role, correct?
Advisory role. Yes.
Oh, okay, sir.
Okay.
Understood.
Then governmental accounting standard. Okay, so it is standard board. It is GASB. So it is more or less similar to FASB. Okay, but they deal with the only or they issue the accounting standard only for government entities. So we will see. I mean, the last section of this course is basically government accounting standard. So at that time we will see in detail. But some terminology you need to keep in mind. So, to whom, for whom they are preparing the standard, government, state, and local government entities, result in useful information for users of financial report, and provide guidance to the public regarding the required financial reporting criteria for financial statement issuing bodies. Okay, so what they're doing means their work is more or less similar to FASB, but they deal with only related to the government entities.
Okay, sir, clear.
Okay. Now, you need to understand the users of the financial statement. Okay, who are the primary users and who are the secondary users? Okay, as the name suggests, primary means when there is a direct effect, and the secondary means when there is a indirect effect. Okay, so primary users of the financial statement include investor, creditors, and lenders. Okay, why they are considered as a primary users? Because their stake involved in the business entity. Investor investing his money, creditors giving the material on a credit with the expectation that he will receive the money when the credit period is over, and lenders they are giving a loan with the intention that he will get the regular interest as well as he will get the repayment of the loan on due date. Okay, so they have a direct interest in the business entity. Okay, so that's why we considered this as a primary users of the financial statement. So
Okay.
primary users of the financial statement do not include regulators. That is, we keep in mind. You just keep in mind, because we generally what I mean, our general understanding is what regulators, because they are getting a taxes. Okay. Or like they can recover the penalty for all non-compliances. Okay, but it is basically on the basis of some event. It is not the obligation. Okay, so that's why regulators is not considered as a primary users. Okay, because see what happened, if a sale is happened or income is generated, then and only then you can collect the sell tax or income tax. Okay, but there is no obligation that they can collect the taxes without happening any event. Okay, so that's why it is considered as a secondary users. Now, the direct versus indirect interest in the financials. Direct, company management, company staff, company suppliers or a creditors, and the investors or a shareholder. So here only one point you need you will find, even though they are not the primary user, but they are directly depend on the company, which those are company staff. Okay. Then indirect financial advisors. Okay, then financial analyst, stock exchanges, and regulatory bodies. Okay, so because they are giving an opinion on the financial statement, so they are considered as means they have an indirect interest in the financials. Okay, because like they will benefited only when something is happened, but in case of a direct, it is an obligation for the company to solve the purpose. So that's why there is a difference in direct and indirect interest. Clear?
Yes, sir.
Now, yeah. So this point you need to keep in mind. Okay, you will get the question on this topic. Financial qualitative characteristics. Okay, so maybe you studied in an ACCA. Okay, so maybe you are already aware of it, but still we need to revise. Okay, so first two things is basically the relevance and the faithful representation. Okay, so these are basically the qualitative characteristics of the financial. Okay, so relevance means predictive value. We are able to predict. Then confirmatory value, we need to confirm, and the materiality. So, I mean, whatever the information we are providing in the financials, we are able to predict, means the correct provision. Okay. Then confirmatory value means the actual value, and the materiality, that means like whenever we see any figure. Okay, so that will be a material, means if you are referring the balance sheet of a company having a turnover of say for 500 million euro, and you are recording or showing a 1000 euro expenses, so it is not a material for you. Okay, means if there is a even though it is a wrong information, it will not impact to your decision. So that's why it is a materiality. So whenever you show some information, okay, so that information actually influence your decision. Okay, so then and only then we consider this as a material. Means we need to provide a concise information so that with a small information we are able to evaluate or we are able to decide whatever decision we need to take. Okay, so that is basically the materiality. So that you keep in mind. Means there is a two qualitative factor. One is relevance and one second is faithful representation. And after that, against relevance, the predictive value, confirmatory value, and materiality. These are basically the another three factor. And for considered as a faithful representation, it should be complete. Means when we are saying the double entry system, okay, so when you need to purchase a material, when you record the transaction for purchasing the material, then what you are doing basically, you are debit the purchase account and your credit the supplier's account. If you only debit the purchase account, then maybe your profitability is correct, but you are not account for the liability. So your balance sheet is not correct. Okay. So we need to evaluate whether everything, all information get completed or not, or whatever may be the year end adjustment or year end provision. Okay. So we need to evaluate whether all the incidences happened during the year are recorded or not. So that is basically the completeness. Then neutrality. So, okay. So neutrality is basically, I mean, sometime what happened there, we know, like, particular, means it happens mostly in case of stock provision. We know the certain stock, we cannot use it. Okay. So, what we means to give the correct or faithful information, what we need to do, we need to devalue our stock. Okay. But we are like quite biased because we need to justify the profit. So that's why we avoid to make a stock provision. Okay, so that is basically the neutrality concept. And the freedom from error means there should not be any total mistake or anything which is just skipped because of negligence. So that should not be the case. So this is basically the three sub characteristics of the faithful representation. Okay, so you may get the one or two question on this topic. So again, keep in mind the fundamental qualitative characteristics of the financial is relevance and faithful representation. Then what is relevance? When we have a predictive value, means whatever may be the numbers given in the financials, we are able to what is going to happen in a future. Then we have a confirmatory value, means whatever the numbers we are showing in the financials, this is full and final confirm. Means we are able to corroborate with some substantive evidence, or we are able to substantiate the numbers. Then third one is the materiality. So we show only those number which will influence the decision. It should not be the case we are showing all the numbers. It is like this. Okay. So, like the sub characteristics of the relevance is predictive value, confirmatory value, and the materiality. Then faithful representation. This is the second major characteristics. Okay. So when we consider it as a faithful representation, when the financial is complete. Okay. What does it mean? Means all the incidences we record during whatever happened during the financial year. Okay. Neutrality. Neutrality means unbiased, unbiased adjustment or unbiased approach. Okay. So as I already inform that whenever we are doing a stock provision, we need to evaluate whether what cost we are able to generate, able to generate, or what benefit we are able to generate from the old stock available with us. Okay, and we need to devalue the stock on time to on a timely basis. So that is basically the neutrality. It should not be the case. Just we need to justify the profit, so we skip the stock provision. Then freedom from error. There should not be any total error or any mistake. Means several times we need to show some notes. Okay, in the financials. So it should not be the case that we are skip any note. So that is basically the freedom from error. Clear?
Yes, sir. This is same as what we learned
In
actually.
ACCA. Yeah, yeah.
Yeah,
Okay.
yeah.
Then how we can enhance the qualitative characteristics. Okay, so when the financials are comparable, means these are the four characteristics for enhancement. Okay, so you need to keep in mind, this is first is the fundamental and second is the enhancing. Okay, so that difference you need to keep in mind. Okay, you will get the MCQs on this. Okay, so
Okay, sir.
enhancing qualitative characteristics, the four characteristics: the comparability, verifiability, timeliness, and understandability. Okay. So what is comparability? Whenever we take the two financials or means the two financials of the one company, means how we need to consider, like the financial for the 2023 and the financial for the 2022. We should be in a position to compare. Okay, so this is the time basis. And the second is when we are using the our financial and competitors financial, so that also we are able to compare. So when we can compare it, when we follow the accounting standard issued by the FASB. If we prepare the financial on the basis of our will, or we are not following the accounting standard, then we cannot compare the financial statement. Okay, so whenever we prepare the financial statement, it should maintain the characteristics of the comparability, which will enhance the qualitative characteristics of the financials. Okay, so this is basically comparability. Then verifiability. Okay, so verifiability is basically uh, whenever we have any number, means it is more or less like a predictive value. Okay, but we are able to verify that number. Okay, so that means you have a quantitative sales data and you have a total turnover also, or whenever you are dividing total turnover by number of units sold, then you will get the unit price. So that may be somewhere listed. So this way you are able to verify the information given in the financials. Okay, then timeliness means we need to prepare on time. It should not be the case that in balance sheet pertains to year 2020, we are issuing in the 2024, because it is not useful for any stakeholder. Okay, because whatever may be the position as on 2020, it is completely different from 2024. So we need to issue the financials within a within a reasonable period of time. So that is timeliness. Then understandability. So it should be clear. Means how I can say, whatever may be the information given in the financial, it can be understood by the layman person. Means the normal person who do not have a sufficient accounting knowledge even. Okay. So if this characteristics is maintained, okay, so then it will enhance the qualitative characteristics of the financials. Okay, so again, there are two type of qualitative characters: fundamental and the enhanced qualitative characters. Okay, in a fundamental, there is a two basic categories. The one is relevance, and the second is faithful representation. In relevance, there is a further three sub characteristics, which is predictive value, confirmatory value, and materiality. In faithful representation, it is completeness, neutrality, and freedom from error. Okay, and the enhanced and qualitative characteristics is basically comparability, verifiability, timeliness, and understandability. Okay, clear?
Yes, sir.
Okay. Now the US gave full set of financials that maybe you are already aware. The one is income statement, balance sheet statement, cash flow statement, statement of changes in owner's equity, and statement of comprehensive income. Okay, so that maybe you already aware, or you learn in while doing a SBR, I think, right?
But sir, income statement, statement of comprehensive income,
This is separate.
same, right?
Yeah, means it is the extension of the income statement. Okay, in a statement of comprehensive income is the extension of the income statement. Okay,
Hmm. Okay.
okay, and then there is a notes to account and management discussion and analysis. These are also the part of the set of financials that we will learn in upcoming chapters.
Okay, sir.
Okay, just a minute. Yeah. So FASB standard setting process. So creation of an idea or a project. Okay. So means how they set the accounting standard. So they gave the process. Okay. So creation of an idea or a project means because of some incidences they may get some idea that we need to see how we can tackle this situation. So that is basically the creation of an idea or a project. Then research is conducted and disclosure are issued through a discussion proper memorandum. Okay. So they will conduct a research. Okay. And they make a proper disclosure. Okay. And they are issuing, I mean, they are circulating through a discussion paper and memorandum. Then they will get the comment from the public. So that is basically the public hearing on the topic are made. Then the research is evaluated as well as comment from the interested parties. Okay, so it is basically means whenever they get the comment, okay, or they are going to evaluate, okay, so whatever may be the comment they receive from the interested party, they will evaluate it. Then exposure draft is issued, which is considered the first version of the new standard. After that, they will issue the exposure draft. Then new draft is solicited for the additional comment and modification. Then this draft also circulated so that they will get the additional comment and any modification required. Then finalization of the new accounting guidance is made by a vote. Means they will place means the way we like make the rules and regulation. They will place in front of a body for a voting, and the majority of vote, which is 4 out of the 7 FASB members. Okay, so if means there is a 4 vote, they're supposed to receive for the confirmation, and if approved, then they issue the new standard as on accounting standard update. So this is basically the how FASB standard get set. Okay, so this process they are going to follow. Clear? So this is just
Yes.
for an information. Okay. Then recognition and measurement in the financial statement. So this topic also you need to keep in mind. So recognition is considered the process of including certain items in the financial statement and categorizing them appropriately as a revenue or expenses item on the income statement and assets or liability on the balance sheet. Recognition can be displayed both with the words or numbers. Okay. So I means how we recognize. Okay. So that we need to study here. Okay. Means if any situation happened, like we purchased the material. Okay. So we need to think means what actually we did. Okay. We received the material. Okay. Now against that material we paid today or we are going to pay after credit period. Okay. So means we need to evaluate when the situation happened. Okay. So if we are paying after 20 days, then we need to book the entry like material purchase account debit to the sundry creditors account credit. So this way we need to recognize the item. Okay. And we need to categorize it. Means it is whether it is related to the profit and loss, whether it is related to the balance sheet, even in balance sheet, whether it is a non-current or current. So that also categorization we need to do. Okay. So recognition and measurement in the financial statement. Recognition is considered the process of including certain items in the financial statement and categorizing them appropriately as revenue or expenses item on the income statement and asset or liability on the balance sheet. Recognition can be displayed both with the words or number. Means number, of course, whatever may be the accounting entry do. This is the numbers. In words, how it happened. Sometimes we need to give the information like terms of the loans. Okay, that also we need to mention in the financials. Okay, so we need to, whatever may be the incidents we recognize, we need to give both in the words as well as the numbers so that any user get the proper clarity.
So, are we supposed to remember these numbers like that SFAC number
No,
5?
no,
So all these numbers.
absolutely no. You will get the proper four options you can easily recognize. Okay, in CPI, I tell you, it is not just like an ACCA that where you need to write a theory. You do not require to memorize anything. Okay,
Okay.
just you should be clear with the concept so that you can choose a right answer. Okay, in Part B there is a very less such kind of thing, but in the reg there are lots of section references, but you do not require to memorize any section.
Okay. And what exactly is the format of the exam? We have 70 MCQs, correct?
70, that I will send it to you by tomorrow or the day after tomorrow. I'm preparing something.
All right.
Okay.
So if I just refer to this as study material and the PDF which you sent, is that enough, sir?
No, no. See, I tell you something. My association is going to happen with the surgeon. Okay. So it is under the signing process. So I will give a proper study material from the surgeon. Okay. That is basically because mostly the PAR is more or less same. Okay. So I just use the old one.
Okay, sir.
Okay. So I will share with you the updated study material. It may take another 5-7 days. Okay. So that's why I suggest means we will start a 40 minutes in next 5-7 days. And after that, we will start with a proper 1.5 hour.
Okay, sir.
But whenever, because see, concept is more or less same. The content given in the universal is very less. Okay. And that is not sufficient to appear for an exam. Okay. But whatever given there, that you need to means if you have a time you need to start your study so that you do not require too much wait later on.
Okay, sir.
Hmm?
Yes.
So maybe in 5 minutes we need to close. Let me see what is the next one. Yeah, okay. We will complete criteria from for recognition in financials, and then we will close. Okay. So what are the criteria for recognition in financials? No, that is also not possible because the only 1 minute is pending. So from here we will do tomorrow. So same time around 8 o'clock, and